This is our Forex blog for November 5th, 2013, and these are our currency indexes, which let you see as a chart what each individual currency is doing. And you can see the dollar trending up, going sideways for multiple hours in a very tight range, and then when it breaks down, it's very likely to continue that trend, especially since it breaks the hourly moving average right here, and it does. It goes down to the lower containment bands, which most times contain price. You can see the euro here went a little bit underneath it and then it reversed. Most times when price hits these bands, you're going to get a bounce off of it, usually within a half an hour to an hour. Just look at all the instances today. You got a bounce, went a little underneath it, bounce, bounce, right here, bounce, upper band, bounce. Upper band, really pretty much stalled the uptrend, came down. Obviously, certain times of the day where volatility is a little lower, historically the bands are a little tighter, and you can have price go above it. But typically price, when it gets above the bands, it does go sideways. It doesn't usually just skyrocket through the bands. And so you want to basically use these currency indexes to trade the strongest currencies versus the weak and the weakest versus the strong. So here in the dollar, when it was trending up and really wasn't that strong, went sideways and broke down right here, you want to sell it against whatever currency is strong at the time. Now the yen's strong, but it's also up near the upper bands. The pound also is strong. I guess we go back another bar or two. You can see this one kind of broke down exactly when the pound shot up. But at this point, the pound is also, potentially up too much, statistically. I would go with the New Zealand, because the New Zealand has been trending up, and it's been pulling back. It's above its hourly moving average. It's support right there. Typically, when a currency comes back to the hourly moving average, it kind of goes sideways at that level, or reverses and bounces off of it. So I would look at around 430, the New Zealand dollar, as one to be looking for buys in. The New Zealand's strong, the dollar's weak. A little bit after 4, we're looking for buys. And we really only have two methods. One is a pullback. You can see this one kind of went up a little bit. Your pullback trade right here, your stops underneath here. And as you can see, very, very tiny risk, very, very big reward. And that's really the key to trading. Small losses, bigger wins. Now some traders don't want to have to learn how to trade, learn support resistance, Fibonacci's, trend lines, Fibonacci profit targets, market profile technology, all the different things that professional traders use. So you can just use our signals, and basically when it gives a buy signal, you get in with your stop underneath here. Typically once it goes one bar your way, you want to move your stop up in half. Typically, if a trade's going to work, it tends to go your way within a few bars. So if you wanted to put your stop right underneath this bar, you get stopped out here, 2 to 3 pip loss. Get long here, you have a sell signal right then, you get out, 2 pip loss, comes down, another 2 pip loss. Nice win here, okay win, pretty much break even. This trade, your stop is here, and that was a huge win. This one, your stop's above the high. You can see it kind of went sideways for a while. You can move your stop down, small loss, small win. And it's a pretty choppy day, but for the most part, if you take these signals, you're not going to ever get a loss more than 5 or 6 pips. And most days when there are trends, you're going to find moves of 10 to 35, 50 pips. Here's another example of our signals in action today. And again, you can see when trades don't work, you have a tiny loss, another loss, small win, loss, huge win, small win, small win, small win, maybe break even, loss, whatever, small win, loss, probably small loss, break even, small loss. And obviously, as the volatile time of the day kind of unwinds, you got to be a little bit more careful. And these signals are a good reference point, whether you're a professional trader or new, to, if you see a signal here and you really are hoping it breaks out through the high, you can always wait if you're a little bit more cautious for a breakout here. If you see a signal right here, you can always kind of draw your trend line underneath the bar's lows and get short right here and have the opportunity to make 10 pips. Clearly we're in an uptrend here, so you're going to be better off, looking for buys, for instance, right here. And typically you're going to always do better just employing common sense trading, techniques, such as an uptrend is a series of higher highs and higher lows. So, this was the low, new low, higher low. Once it breaks, that higher low area, and of course this was another area, went slightly underneath that low. And also the highs weren't able to make new highs. It's pretty clear that the trend's over. So you might, at this point right here, be a little bit more cautious. Draw your trend lines on there, Fibonacci profit targets. Wait for some kind of a pullback to at least close to the 38% retracement level. When currencies have gone up 112 pips like this, they're going to need a little bit more pullback. And here the market really failed. This is about a 50% retracement of this swing. And so, typically you're going to get a two-wave move down, which is, right near the 38% retracement. If you draw your fibs on this little swing here, whoops. Look what, that's a Fibonacci cluster and another buy signal right here. You could certainly take this trade, and instead of having your stop just a few pips underneath it, you can put it right underneath major support right here. A little wider stop, and you can see it kind of went up. You got a sell signal. The trend's up. This is a much higher probability buy than the other ones. A human can recognize these. It's very hard to teach a computer to give it a little wider stop. You get a sell signal right here. It's very likely to try to work its way up, at least one more wave. It may or may not break through the highs. Once it kind of goes up and you get a sell signal here and it's going sideways, you move your stop up. At that point, it's either going to stop you out with a super tiny loss or it's going to go up a little higher. And because this is getting into the dead time of the day, you really want to kind of, watch it as it goes up and move your stop underneath, maybe the 2 bars back, lowest low, and you're out somewhere around 60.45. You're in this trade around 30, maybe 15 pips. In this instance, you risked about the same amount that you made, but the majority of the times your risk was much smaller than what you made. And that's the reason why trading works, and that's why when you use our currency signals in combination with the currency indexes, and you see that the pound's strong and the dollar's weak, you're going to be focusing on buying this. And you can also, use our drawing tools and other methods to increase your odds. For instance, this wave made one move up, second move up. You can draw your fibs off of this wave, and guess where it stalled at. So you already know ahead of time that this went up one wave, two waves. This is the third wave. Typically, you're going to run out of steam up here. It's above our upper containment bands. Our counter trend signals are starting to fire, and they only fire at extremes. It's also at a fib target, so you can go short right here, make 15 pips, 10 pips, 20 pips. Very high probability, and in fact, you might not want to buy this, but this is your likely profit target. This becomes the first decent trade because at least at this point you have a much higher chance of a decent profit, a profit bigger than what your risk is. If you bought this one right here, your profit, likely profit and risk is the same. Only foolish traders and new traders that don't know this take these kind of trades. You want to take trades that are likely to give you at least 1.5 to 2 times more a bigger profit than what your risk is. Sometimes you're going to make 3 to 5 times more than what you think, but you're always going to lose when you're wrong what your risk is. And so, once a currency has gone and gone and gone, you might want to be a little bit more cautious up near the highs. Some days currencies just keep going and going, so you certainly can take a stab at it, but Once you're in a trade and it's kind of going sideways like this, you want to try to get out with 2 or 3 pip loss or break even. So that's it for today's Forex blog. We're hoping to release a new version of the software tonight or tomorrow morning.